Hello, everyone, and welcome to yet another episode of Season 3 of the My Tech Story Africa podcast. My name is Alice Kanjejo, your lovely host, and I am in awe. You guys have really been pushing the numbers on YouTube for this podcast, and I am eternally grateful, guys. Within the last week, ever since we rolled out the roundup to today when we're recording the episode, which has been 2 weeks, we have gained over 140 subscribers. Literally in awe because we are taking a break to just prep for this new season and this new era of My Tech Story Africa. And so I am eternally grateful for all of you subscribing. I call for you to do that from wherever you're listening from, whether that's on YouTube, Spotify, or any other major listening platforms. A reminder that we are also rolling out our newsletters on a regular basis. So please subscribe to our newsletters, mtsafrica.co/join, where we'll keep you updated on the latest news and trends within the tech space and all the good stuff. Anything you need to know about in tech, listen, we are the reference point. So please subscribe to our newsletters. Such amazing information that happens there. On this podcast, we focus a lot more on storytelling. So if you want to stay in touch within what's happening in the tech landscape, then that's the best place for you to do it. And as well as our social media platforms, My Tech Story Africa everywhere, MTS Africa _ on Twitter. Now that we have all that out of the way, we are getting into today's guest, who is Julius Abuje, and he is currently serving as new business development lead for Paymentology across the Sub-Saharan region. In today's episode, we'll hear about his journey from medical research in biotechnology to becoming a founding member of Peach Payments, a company working to make financial transactions faster and easier across Africa. We'll also explore his current work at Paymentology, a company offering banks, digital banks, and fintechs around the world an opportunity to issue and process all forms of cards and transactions at scale through their cloud-based platform, which is rich in data, has a global footprint, and proven track record of powering industry leaders and game changers. Julius will be discussing the challenges that he has encountered in making payments more accessible across the continent. He'll also share his vision for the future of payments in Africa, which includes a collaboration between traditional banks and neobanks and fintechs. By the end of this episode, you'll probably be gaining more insights into the hurdles and opportunities that lie ahead in Africa's quest for financial inclusion. I hope you enjoy this episode as much as I enjoyed having Julius as one of the guests that will come and speak on financial inclusion. I thought that it was so insightful and so profound for someone who's looking, especially to work within the financial landscape or are currently working within the fintech or banking realm. So that being said, enjoy the episode. Hello, everyone, and welcome back to another episode. Today is an exciting one because we have Julius Abuje, who I'm going to give the opportunity to introduce himself. He currently serves as the new business development lead at Paymentology for the Sub-Saharan region, and I'm very excited to speak on all things payments because we know finances and financial inclusion has been a buzzword throughout the past 2-3 years, but we really want to get into the depths of that. And so now is the time. Julius, kindly introduce yourself to our audience.
Thanks. First of all, thank you, Alice, for inviting us here and allowing me to be here and kind of give you my journey on what people call financial inclusion. To me, I think it's just enablement. And as you said, my name is Julius Abuje. I lead business development, new business development for Paymentology in the Sub-Saharan region, and happy to be here.
Thank you so much. And now to get just a bit more detail about who you are, maybe you can walk us through the beginning of your journey, really. Like, how did your story begin? You know, I think when we spoke earlier, you had mentioned having a play in medical research and then building from there. So walk us through a bit of your journey.
Well, I don't know if you want me to go from the onset, because would you want me to start with when I was born? That's actually the beginning, right?
Well, yeah. Well, you can start from maybe what you thought your interests used to be, and then how that started to slowly transition as you got into your career.
All right. Well, I got your question. It's just moving. Well, I think for me, the whole finance thing is something that I kind of looked at it from, as I said, financial inclusion is a word that is thrown around a lot. Mm-hmm. But if you think of it keenly, you'd understand that essentially it's more of enablement, because if you are including someone financially, you're enabling them. So once you enable them, then what? So my journey started from a very simple incident. As you said, I went to JKUAT, Juja. So we are the Juja boys. And I got out of JKUAT with a degree in biotechnology, and luckily or unluckily, I got an opportunity to work with the US Army Medical Research in Kisumu, part of my internship there. And that's actually, I think, that is when I started to realize that as much as we are trying to cure the three things that we said we were going to do initially, which was the three things when Kenya got independence, which was poverty, diseases, and I think it was education. Yeah. I mean, as much as we try to focus on diseases, poverty is essential to be addressed. And that's when I realized that there's this particular, but my story simply boils down to this particular incident, if I may.
Yeah.
Moment, if you probably call it a eureka moment. I had gone to buy some stuff from a shop. And having worked in the bank, and Lipa na M-Pesa was just coming in. And so we were, I think, probably early adopters, because if you have your mobile app, you could Lipa na M-Pesa. So I went and tried to buy some stuff. I won't say what.
What year is this? Sorry.
Yeah. This is way back in 2016 and 2017.
Okay.
I think between 2016 and 2017, towards the end of 2016, actually. And I couldn't buy it. And the problem was I couldn't transact on Lipa na M-Pesa. And I was in the village. Lipa na M-Pesa was already adopted in town. And at that point, I realized that if I am from, say I'm from Nairobi and I've come here, how many other people are from Nairobi or other towns and have gone back to the villages and they're trying to make these purchases and they can't? And essentially, that's the moment I realized that if there is a way in which we can be able to educate this person who is at the village, that you don't need to have a very complicated system for you to be able to receive payments. And I think people always say Africa is a village. So again, now zooming outside from my village, looking across Africa, you realize that, well, that's it. That's the problem.
That is not just a Kenyan village problem. It's a Pan-African issue.
It's across the board.
Yeah.
And so I think at that point, I started to look around, just to see what the payments industry was like.
Can I just cut you short there slightly before we pivot into that? You mentioned that you got your internship at biomedical.
No, biotechnology.
In biotechnology, yes. So I wanted to know that shift in your minds, because I think they're two completely different kind of things. So even before that eureka moment, I'm wondering, did you start thinking about pivoting towards leaning more towards finance or payments and that version of tech, or did you see yourself still in biotechnology, or you were just open?
That's a very good question. I think that question will probably resonate with my peers or people who graduated around the same time I did.
Yes.
I think it's more of what were the opportunities at that point, and the fact that, well, I got this opportunity to work with this amazing institution, the US Army Research Institution.
Yes.
But for me, as Julius, I think what I was looking for was something that was actually going to make an impact. And I think it's more of what I wanted to achieve at what level and what I thought was the right way to achieve it. And again, the story goes back to my village. If I want to help people to be able to pretty much open them up and help them achieve a level in which now we can say, okay, that particular village has a financial inclusion of, let's say, 60 or 70%, right? How do we get them there? So while I was in this field, and you know, probably most of your viewers will probably agree to me is that these particular fields, unless there has been maybe tremendous change, you're stuck doing the same thing
over and over again.
Yeah, because you have standard operating procedures,
Yeah.
and this is what you follow.
Yeah.
I wanted something that's it's going to change the world.
Yeah.
You know, everybody wants to change the world. They
Yeah.
just don't know how.
And this was
So
your way
that's
of doing
how
it.
I realized that this is the path.
Yeah. No, and I love you saying that. I think on this podcast, there's a lot of guests that we've had that speak on purpose. And I hold that so strongly in that your career or the job that you have is something that you're going to show up for every day, more days than not.
Absolutely.
And you're going to put a lot of your time into it. And so for me, I strongly believe that finding something that gives you a sense of purpose is such a good foundation because it's able to help you, guide you through how maybe you want to maneuver to the next. I think for me, my tech story was definitely one of those things that I found purpose in. But of course, it came within having that penetration into the tech space in the first place. But yeah, I applaud you for that, you know, finding purpose in something so profound, which is financial inclusion.
Thank you.
So yeah, we can then go back to where you were expressing to us, you're about to express to us now, once you figured out that this village is having this issue of financial inclusion penetration, what was next?
So thanks again, and thanks for your kind words. I think once you realize that, again, it's more of, I must have mentioned this in one of the calls that you and I had, that I'm always looking for solutions. So instead of chasing solutions, I'm always chasing problems. Because when you chase a problem, you try and figure out a solution. And when you figure out a solution, then you try and see the fitability, if it's fit enough for a suitability for the people who you want to present that solution to, or you check if it's something that can be improved. So one of the things that I did after realizing that this is an opportunity is I used the online tools. Again, the problem was you can't get information about players in the financial space anywhere unless you use online sources for you to get that. So I think that's why I pretty much became very active online, trying to get information as much as possible. One of the sources of information, believe it or not, was LinkedIn, by the way.
Wow.
I got so much information from LinkedIn. That's even where I got the first employer who got me into the financial tech space.
Through
DPO.
LinkedIn?
Yeah.
Like, could you just slowly just kidogo to elaborate what you mean by LinkedIn? So you were looking for people who are in the space through LinkedIn?
Yes.
Wow. And were you DMing them or?
No, we're just connecting. I think at that point I was working in the bank. So one of the steps that I actually made that I am always proud of is the fact that I transitioned from being this medical person to talking the language of a common banker, because let's call it the first entrance into the financial space. I worked with Cooperative Bank. And do you know where I was stationed? In Gatundu, a village. So I was stationed in a village, and the problem that I saw about financial inclusion was in a village.
There we go.
So it was a purpose on top of a purpose. So I was in Gatundu branch, worked in Gatundu there for about 1 year and a couple of months. Then I went to direct pay online. And I remember very well, we got the first campaign to enable merchants to receive card payments. Back then it was called DPO Duma Pay, where they had an application that you install on your phone, and then you get a PDQ machine. I still know how those things work, right? You get a small PDQ machine, so if someone comes to your shop, they can easily accept payment. So that's how I got into DPO, and we did a massive campaign which was powered by MasterCard. I think we were called the Massive Team. And when we were done with that campaign, subsequently, of course, we joined the company. I worked with DPO for 1 year and a couple of months until COVID hit.
Until COVID hit.
Yes.
Can I just stop you briefly and say what was the difference in how payments were being resolved, whatever. What's the difference between how payments were being done at DP versus at, M-Pesa? Like, what was the key difference there, or are they two completely different financial products?
Well, that's a good question, and that's one end of the pyramid, right? Or let me say that's one end of the stick. The other end of the stick is, if you look across, and now we are not in history, we are in the present, right? If you look across Kenya right now, there are around 30. This is a research that we did while I was at Pitch. There are about 30 or less, if I may, and I can be corrected on that number, PSPs, payment service providers, that currently operate in the country. Now, whether they have licenses or not, that's not for me to talk about. But if you look across, you realize that what these payment facilitators, as they are called, is that they aggregate all payment modes. So you get M-Pesa here, you get cards, you get, if you have Airtel Money, there's Airtel Money there. And the difference between that and I don't want to kind of compare these particular brands, because these are ecosystem partners of Paymentology. So the way payments is done from a PSP's angle and from a telco's angle is that probably the PSP will provide you more payment modes.
Okay, I get that.
Yeah.
Okay.
Not necessarily the one that is frequently used, but Kenya is a mobile money economy, so you'd expect each and every shop to have M-Pesa, right?
People to be able to
either you send money or you pay to till, pay bill, or pochi.
Yeah. Okay, I hear you. I think that's also, I guess, a lot of what the fintechs are doing. It's still payments, but different from how telcos handle it.
Absolutely.
Okay, so now you're at the bank, and now
I'm at DPO.
Now you're at DPO. From DPO, what's the impact that you can say that you saw within yourself at that time, and how it led you to the transition to your next opportunity?
Well, impact. Well, I think for me, my impact will be, or the most important thing that I think, if I go back, or if you talk to anyone from DPO, will tell you, is that I'm always looking for solutions for merchants. So there is a very big difference, and this is something that I have come to learn so far, that there's a very big difference between selling a product and selling a solution. Because for you to sell a solution, there has to be a problem. And so DPO prepared me to be able to sell solutions, because we were always looking for problems. It goes back to my mantra, where I'm always looking for problems. Yeah. So when there was the whole COVID situation in the country, and that is when actually, if you look back, I mean, it's 4 years now, right?
Yes.
From 2020. It's 4 years. If you look back, you'd realize that that's the point when now fintechs started to be seen, right? They're already there, but that's when they started to be seen. I mean, that's when they became a solution.
Yeah.
So in itself, it's a solution, but there are gaps. There are always gaps in
solutions.
Yeah. So while I was at DPO, I realized that all the merchants, and I think if you maybe I don't want to mention this, but if you scroll through it, see that while I was at DPO, we managed to get so many merchants that the team that we were at that particular point, we were awarded the top sales team, the whole of Africa actually. So
the whole of Africa actually.
And DPO was in 19 countries then. So and it
That's
wasn't
a huge market.
Yeah, and the thing is, it wasn't us. It was the solution. We were selling the solution. But then at one point, we realized that there's this with the solution, right?
Yes.
So the gaps that were there at that particular point, and this is in 2020, because remember, businesses are now moving online.
Yes.
These are guys who are used to getting their money immediately. If you go to a shop and you pay via M-Pesa, they get their money immediately. But if you're telling them to, go and probably develop a website, sell on your website, they'll ask you, okay, fine, I'm selling on the website. So when am I going to get my money? Then that's where the gap is, right? People want their money yesterday, and the transaction is done today. So you need to be able to settle them the day before yesterday, right? So it just kind of makes you want to look for solutions to enable these many guys that you have already convinced that this is the solution.
Yeah.
And so with that particular gap, I think that's what prepared me to move to my next level. And the next level was pitch payments now.
It was pitch payments.
Yeah.
Before we get into pitch payments, I want to introduce something slight based on how you were talking about the problems that the financial systems were experiencing at that time. And that is the banking conversation. So, I mean, we had the mobile telecoms that were doing what they're doing, and then we have these PSPs that are doing what they're doing. Where does the conversation of banking come in, and why? I mean, we hear a lot of conversations on payments have issues, and a big part of payments across the globe is the banking side of things. So I want to just know now, when banking comes into play, then what are the challenges, and how are PSPs or fintechs rather, creating solutions that are slightly different from how the traditional way of, money management is being done. I think in our previous conversation, we had talked about having even up to 25% bank rate to just get a loan. So I want to just touch on the issues when it comes to that kind of financial systems and how it's different to how fintechs are now doing it, and so on and so forth.
All right. So, and that's a very good question, because you've actually touched on one of the topics that, and I've attended quite a number of these fintech festivals. And this is the message that has been resonating in each and every event that I go to, that fintechs and banks need to stop looking at each other as competitors, because
I agree.
These are all part of an ecosystem.
100%.
So the way banks move, banks are regulated by central banks, right? And maybe I want to break it down so that every single person understands why banks are the most important partners to fintechs.
Please do.
A central bank in each and every country is established as per the laws of that particular country, right? And so I'll give you an example of Kenya. The Central Bank of Kenya is established by an act, right? And the governor is appointed. And the governor is appointed by the president, right? And you can correct me, for the lawyers who will be watching this, please feel free to correct me here. I'm not an expert in law, but I think this is as much as I can tell.
Yeah.
Now, the president is elected by the people. So in essence, it is the confidence. We're speaking about the confidence. The central bank has the confidence of all Kenyans, because if you think of it backwards, it is actually an institution that is created by Kenyans. Now, banks are regulated by the central bank, meaning the people who actually need the financial services, they rely on the central bank to look ahead and give regulations that will protect them. And that's why it is important for fintechs to understand that banks not only are they regulated by the central bank, but they have the confidence of the masses.
100%.
But at the same time, while they enjoy that, while they ride on the jurisdictional powers that are given by laws, they should also be cognizant of the fact that the generation that we currently have, and this speaks on to the digital adoption and what's happening in the markets right now. This generation is a generation that cannot leave their phones behind, right? So it requires innovative solutions. And that is now where fintechs come in. Fintechs have, and I think if you look across, some of the most successful fintechs are actually running on sprints. And banks, I'm not sure if banks have implemented sprints within their organization. Because if they did, then there could be organizations that move very
Solutions that come quicker.
So the question, I think, therefore, is why can't the banks and the fintechs look at this as nobody's cannibalizing the other, but we are all working towards a similar goal, and that's financial inclusion, as I said earlier, enablement.
So what's the beef between
the customer? Everybody wants to own the customer.
Yeah.
And this is one of the topics that I think we were discussing last week at the Africa FinTech Festival, that open finance, as much as we keep on saying, and I know there are countries that have actually established regulations to guide open finance, but open finance essentially is sharing of data. And this is financial data. And what we are also saying is that while you're sharing the data, can we have somebody who takes ownership of the data? And that's why I think if you look at it in terms of regulation-wise, we have done tremendous jobs, because right now we have the Office of Data Protection, and you get a license for processing and storing data, two separate work streams. Mm-hmm. And PSPs are being forced to get that. Not really being forced, it is in their best interest anyway to get that. Mm-hmm. So the beef is who owns the customer. But nobody is really asking, what does the customer want? Or what are the spending habits of the customer?
We just want payments to be more seamless.
Exactly. And if that is exactly what you want, what are you paying for? Do we have that information? And now, can we develop a solution that will address that particular need, so that we are not only enabling you, but you're giving you access? Mm-hmm. Yeah.
I like that. Just based on just now, do you think that banks are feeling pressure to want to collaborate with these fintechs? Because there's a rise. There's been a boom. Or do you still think there's a lot to be covered before we get to that place where we're all working together?
I wouldn't want to answer on behalf of banks.
Okay, sorry.
But this is what I can say. I think we, where we sit as Paymentology, and we pretty much sit on the issuing space, mm-hmm. and we work with any bank. We mm-hmm. are bank agnostic. Mm-hmm. We work with banks across Africa, mm-hmm. across the 52 countries that mm-hmm. we currently operating in Africa, mm-hmm. that we can operate in Africa, mm-hmm. Subject to some regulatory stuff and local switches needed. Mm-hmm. I'll explain that at one point, hopefully. Mm-hmm. We have seen a tremendous improvement in the way banks are looking to engage fintechs. And mm-hmm. we have done a case, not really a case study, we have done a white paper mm-hmm. on this particular topic on open finance. Mm-hmm. Maybe if we go back and give you one example, if you go to Ivory Coast right now, we have partnered with banks there to enable a fintech to issue cards. Mm. And this particular fintech is addressing the needs of the farmers. Mm-hmm. Now, recently, if you look across Africa, and specifically looking at Kenya, the government is trying to push a lot of farming. And when you farm and you're a commercial farmer, the next question definitely is, how am I going to get paid? Is it a check? Mm-hmm. Can I get a better way? As you said, you just mm-hmm. want payments to be seamless.
Yeah. Okay. Actually, agri-tech is on the rise right now. I've been seeing a lot of progress there, a lot of funding coming into play. So I hope we do see that evolve over time. After that interlude, now we can continue with your journey. You're now at Peach Payments and you now have solutions that have gaps. Now, how was your experience there and what was your work there?
I think Peach Payments is the organization that I got to have hands-on experience in getting a PSP to work in Kenya. Because I remember when I joined, I was the only employee out of South Africa, and I was stationed here in Kenya. I was working directly with someone who was a co-founder, and we were trying to preach a gospel. Now, the gospel that we were preaching at that point was addressing the gap on payment being made today and the merchant wanting the money yesterday. So we were trying to solve that particular problem by providing what now is commonly known as an ISO model. And the ISO model, if you dig deeper into payments, there are PSP in the acquiring space. There are two types of acquiring. There's aggregation, where the PSP will hold the funds and then settle the merchants after a certain set number of days. And then there's the ISO model, where the bank owns the customer. The payment service provider only provides a gateway. So it's a gateway model. It's only a gateway. It's like a holder to a door. It enables the merchant to open the door for the payments to come in. But the payments don't come in to pitch or to the ISO model partner there. It goes to the bank. So then the bank settles the merchant. Now, as per the regulations, sorry,
I was just going to say, how long does the result?
Yeah, so I was headed there. And that's a very good question, because that's the question we get out there. We used to get out there. So as per the regulations, you're supposed to be settled in 24 hours. So the bank gets settled. On the acquiring side, the bank gets settled the funds in 24 hours.
Yes.
So the merchant should get the money in T+1. So essentially, the money is coming in tomorrow, right? And we worked on a very interesting model with one of the local banks here in Kenya. And when we approached the market and we started selling this out, especially to the tours and travel, the hospitality industry, this is something that was solving their problem, because these are people who have last-minute bookings. And they have to make reservations, they have to pay for a couple of other things, transportation and all that. And so we are taking all that into account and providing a solution that will enable them to be able to meet what they want to do.
Yeah.
So that was the gap, and that was the solution at that particular point. The problem was preaching that particular gospel to a bank, because in the ISO model, when the bank takes on the customer, the bank then assumes the risk of chargebacks and all that. So I think that is how we tried to solve that. So we did that. We tried. We've worked with. While I was at Pitch, we tried to bring that particular solution across to other banks. We managed to get 3 more banks on it. Now I think there are 3 banks who are supporting Pitch Payments. I'm not sure. Probably somebody from Pitch will be watching this and saying that, well, now we have 10 banks. Trust me, I have no idea.
Yeah.
Not there anymore.
Yeah, not there anymore. But I did see they've made a couple of strides from the time you guys launched, but back when you were there. So let's hope that Pitch Payments is still doing well in their front. But that's interesting that you brought in that conversation and how payments are resolved. And I think that is the biggest challenge that even us as Honeycoin, where I work, we still battle with every day, and so as many other fintechs or payment systems, is that time frame of resolving is actually the difference between customers deciding to choose you over another payment solution. So hopefully we are able to see some progress going down the line. But I think everything is just a culmination of instilled pressure to try and make payments work from all front. And I think when we keep having conversations like this on a podcast like this, or have more and more people talk about, payments, financial inclusion, the more people feel pressured enough to create even better solutions. So I'm hoping for nothing but the best. I have a soft spot for fintechs as we go along. And then, so how long were you at Peach Payments, and how was the transition then, I'm assuming, to Paymentology?
All right. Seems like you have all your questions are good. Somebody leaked.
Somebody leaked. I got it.
Somebody
Talent,
leaked the
talanta.
Okay. Well, so again, I think I will always take you back to the same thing. I'm always looking for solutions.
Problems to find solutions.
Always giving solutions and looking for problems. Yes, looking for problems. Now, when I was at Pitch, so your question was how long was I at Pitch? Almost 3 years. I actually stayed there for almost 3 years. And when I look back, I think we did an amazing job. Well, the jury's still out on that one, but I think we did an amazing job. And while I was at Pitch, my biggest worry now became it goes back to when I was at Coop Bank. When I was at Coop Bank, in my early days in the financial services industry, there was an introduction of something called M-Visa, where you scan a QR code and you pay. And this was really pushed out. And then Safaricom came with tap to pay at some point, right? Yeah. There was something you had to put at the back of your phone and then you tap. So I'm always thinking, while on the acquiring side, we try to enable merchants to be able to receive payments using different modes of payment methods. So there's M-Pesa, there's all that. But the question that always lingered in my mind was, who is actually driving the adoption of these acquiring machines or these acquiring methods? It's the consumer. So if it's the consumer who is driving the adoption, then isn't it better to drive financial inclusion from the consumer's perspective
100%.
Than from the acquirer's perspective?
Yes.
Because it is very, and you can, by the way, you can give me an example. If you've ever gone to a shop or any store, and the owner asked you if you wanted to pay using a certain method, like, do you want to pay using your card or do you want to pay using M-Pesa? No, you always ask. You as the consumer, you're the one who is always asking, can I pay using my card?
Yeah.
Can I pay using M-Pesa?
That is true.
It's a conversation that is driven from the consumer's perspective. Now, having learned that and having realized that, I started to look for opportunities that can help me drive financial inclusion from a consumer's perspective. And that's how I ended up at Paymentology. Because now Paymentology is on the issuing side. Because what we do is that we enable banks, fintechs, telcos, neobanks, microfinance institutions that we have around here to be able to issue cards, whether it's a physical, a virtual or a digital card. We have the ecosystem partners to enable them to do that. And while we do that, it now shifts the conversation because Africa is fragmented. I mean, I can go to Tanzania and send money to somebody on Vodacom, right? But if I go to South Africa, if I don't have my card,
you're finished.
I can't pay. I mean, I'm telling you, and this is a true story. Last year, while I was there, I couldn't buy anything because all the money I had was on M-Pesa, right? And so now
you didn't,
I had to move it.
Money when you had to move it
to a card,
and
then use my card.
Yeah.
So is that seamless?
Not really.
Yeah, and you said what you guys want is to make seamless
payments. Yeah. Oh, definitely. What's interesting is that every African market is normally so different when it comes to payments, and how we're so used to, at least here in Kenya, just the mobile money payments. I think how we manage to be the lead on that. I think the payment system solutions for mobile money, we take the lead there. But when you go to South Africa, it's a lot more on
more
card payments. And if you go to a lot of African countries, are still cash economies. And so it's interesting that you mentioned that. And it's not, what my point was, the differences we've not found a way to resolve effectively those differences, or at least people are still trying to make that. But adaptation, as you said, can be a challenge. And I think that leads me to my next question, like why you mentioned that Paymentology prioritizes, card, issuing card payment, cards in whatever
solutions.
Card solutions. Yes, thank you. But I guess the question that I have is why do you think that this should be a primary focus to help drive financial inclusion within the Pan-African system? And global, rather.
And globally.
Yeah.
All right. So that's another good question because when we think of Africa, as they say, Africa is a village. In fact, they even now zoom out. Now we're in the global stage, right? They say the internet has made the whole world a global village.
Of course.
I'm able to know what's happening in Japan, right? There's a certain hashtag that did trend for a couple of days, and it was all over the world just a couple of days ago. So if you look at it in terms of what we do as Paymentology, we are trying to zoom out of Africa. So not only are we enabling somebody from Kenya here to be issued with a card, which is a virtual card, which is tokenized for tap to pay, and they will go to South Africa and they won't need to transfer money to any other card for them to make a payment. That in itself, that gives you freedom. That's essentially freedom because you can pay anywhere, anytime. You're not limited. But to go back to your question, because now I want to break it down for the African market. Right now, they say that if you look at the research papers that we have actually gone through, quite a number of them, and a couple of researches that have been done on financial inclusion in Africa, you realize that we are still having a significant population that is either underbanked or unbanked. By underbanking, I mean you go get an account. I'll give you an example of a specific country. We have a partnership with a company in Guinea. I think it's Guinea-Bissau. Let me just confirm the name, because Republic of Guinea, because there are two Guineas there.
Yeah.
And it's called Paycard. Now, historically, getting an account required a lot of documentation. And this is to address the underbanked or the unbanked population, which is very massive, actually. For you to get a bank account nowadays in Kenya, you can probably get that in seconds. I tried to get, how do they call this, investment accounts that you get, money market fund account. And I got a money market fund account in 20 minutes. Now, those are opportunities. This is now financial inclusion, right? Because it's enablement. In certain countries, for you to get a bank account, probably take you 2 weeks. Bank account.
Wow.
So what we are doing essentially is to work closely with fintechs. And we are not leaving banks behind. Because fintechs bring these revolutionary solutions, and banks, with their understanding of the regulatory environment, how to navigate the regulatory hurdles that are in different countries. They can co-create and come up with a solution. So we are not only opening up Africa to be able to transact within itself. Now, opening up Africa, zoom out to the rest of the world.
Yes.
Right now, if you go to Isili, 90% of the goods there are imported, right? These guys, right now, if you go to Isili, banks are opening branches there, like crazy. There are so many banks there. 10 years ago, Italy was still importing clothes, right? I mean, for as long as I can remember. Yeah, and I'm not that old. So,
Old is subjective.
but banks are now seeing the opportunity.
Yes.
Now, what about banks co-creating with fintechs to provide solutions for these guys who their bread and butter is importing goods from abroad and selling them? And if you want to know how big that is, every other shop that goes to buy goods from Isili scales all the way down to Busia, and that is the farthest end of
Western
Kenya,
of Kenya.
right? It scales all the way down to, I'd say to probably Lodwa, because all these guys come, get goods, go and sell them. And now if we make it easier for people in Isili to be able to buy and be able to sell, then it means the cost will also go down, right? Meaning your clothes will be affordable.
Yeah.
And all the other stuff that you...
It has a ripple effect.
Exactly.
On it.
Now, how do we enable them? That's where now we play. We co-create with fintechs to layer cards on top of these fintech solutions so that if you have an app, like, I won't mention the names, by the way, but if you have an app and you have a card on top of that app, and this app is also linked to your bank account, you're a business person, you're able to receive payments. The payments go to that particular bank account through a fintech, and this particular fintech has given you this app. You can see your balance on the app. You can easily then use your card to order goods. Seamless. And you said you want the payments to be?
Seamless.
Seamless.
That maybe is the title of this episode at this point. Yeah, no. I think I see the vision and why this, definitely makes it easier for people to make transactions. I think my biggest follow-up question then becomes the issue of adaptation. I think that just from, I could be wrong, but I think the African culture, for a lot of things, especially the older generation, find it very difficult to adapt to new products. But then how do we make sure then that this new generation of people do not miss the bus when it comes to adapting these solutions, because it's a good solution that we've provided. And sometimes this is, I think, in line with my theory about how startups think, which is not always effective, is thinking that I need to build a product fast, make it perfect, find the problem, find a solution, but how are we communicating the solutions to the people that actually need to use it to help the business even run? So I'm just curious to know about your thoughts on adaptation and how we're going to be able to tackle that.
Okay. Well, adaptation is normally a very tricky one because there are so many factors that drive adaptation. So I'd just give you a statement, probably you'd get some sense of direction on what my thoughts are. I think financial inclusion is a question of awareness and access, because once you're aware of a product, the next logical thing, if it's a solution for you, is to check if you can access it. So there's a lot of debate surrounding how do we then promote awareness that we have this amazing product. And then while you're promoting awareness, there is something else that is a factor of awareness that most people ignore: suitability, or what exactly is this that you're telling me. So go back to the old generation that you're saying they don't adopt. Is it suitable for them? Is it solving their problem? Because if I were to give my grandma a card, not
the TA.
Yeah, but if I give my grandmother an M-Pesa account, but now imagine if I lay a card on top of the M-Pesa account, and then I tell my grandma that there's a card on top of it, assuming my grandma would want that. See. So it's suitability and awareness and access. Now, if we promote awareness, of course, you have to develop something first.
Trust.
And when you develop, trust, probably, because people also...
it's money. It's a very delicate matter. I think I find people find it more difficult to adapt to new things when it comes to money.
And cost. I think cost is one factor that is overlooked, and probably, but I don't know if it's true, but probably decisions are made about costs without looking at the ripple effect. So if we increase, if you make a product expensive to use, who is going to use it? Because I wouldn't want to pay, right? I wouldn't want to pay. I mean, I just want to pay. So why are you charging me to pay? Why can't I just have my money in cash and pay and go? Cash gives you that. All these other payment modes probably charge you.
Yeah.
So the way we can tackle the question on charges is probably by enabling numerous options, and therefore the cost can be spread across, so that each and every person has a solution that works for them. Then we promote adaptability and usage, because adaptability definitely translates to usage.
Okay, and I don't know if this is going to be too personal, but just curious to know that, do you, from the time you guys launched within the African space, working with both fintechs and banks, are you seeing it being adapted at a rate that is, let me rephrase, do you see that this model is being adapted not only by, the fintech clients that, maybe you have, but by consumers? Are you seeing that this is something that, okay, this is something that has a space here?
So, if I zoom out and look at the whole of the African continent, excluding the Middle East part, the Egypt and South Africa, I think fintechs are looking for those particular pockets that, or let me say, those particular problems that most of the people are not paying attention to. And that's why you see there's a lot of, if now I come back to Kenya, there's a lot of people who have taken up the M-Pesa virtual card, because it has promoted, or rather enabled them to be able to perform transactions that they were not able to do earlier, right? Do you listen to Spotify? Do you have Spotify?
There are people listening on Spotify right now, actually.
And you do have all these other platforms, right?
Yes.
And the thing is, most of these platforms, you have to subscribe.
Yes.
And now think of it in terms of the provider of these particular platforms. It is very expensive for you to go into each and every market, integrate into the local payment modes that are there. They have to come to Kenya, do mobile money, M-Pesa, Airtel money. There's the other one that's normally disappearing, T-Cash. Then they have to go to Rwanda. They have to do MTN. They have to go to Uganda. They have to do MTN. They have to go to Tanzania. They have to do Tigo Pesa, Hello Pesa, and Vodacom. Vodacom and Pesa.
Yeah.
Then they go to West Africa. They have to do Airtel money. They have to do, and if you go to Nigeria, now you'll be overwhelmed because there's so many.
50,000 fintechs.
So what is then the logical thing to do? Have one simple mode of payment, and that's cards. So you go to Netflix, add your card, you're subscribed. Imagine the power you've given that person. You've actually not only given them power, but you've given them peace of mind. Because this is someone who wants to watch Netflix and chill, probably. And they keep on having issues. Because for you to get a card, an ATM card, and nowadays banks have done a very good job. You can get an ATM card while you're seated at home for some banks. But it's a physical card. You can't be carrying it all over the place, right? And most of the time, even if it's a physical card, you want to add those card details manually. Probably this bank card, you won't use it again, so it won't be funded. But people always seem to have money in their M-Pesa, right? So it's logical.
Yeah.
So from that angle now, that's how I think the adoption is going to be, because we have providers who require us to provide solutions that enable them to be able to provide services like Netflix, but they also need to get paid. And so adaptation with fintechs and banks, I think, co-creation will lead Africa towards more digital
A more digital
than
payment
cash.
system.
And we have a very young generation. The median age, was it 18 or 23? I'm
Gen
not sure.
Z.
Yeah, the Gen Zs. So again, I'm very old. So
Yeah.
Yeah.
Now you're contradicting. You said you're not that old.
not that old, but old. I'm in the middle.
Yeah. Okay, then I guess in terms of the solutions that you're providing at Paymentology, then what does it take for then a fintech to be able to work with you, or a banking institution, and what was I going to ask? I was going to ask, what does it take for a fintech to work with you, as well as maybe the banking institutions that I think you already have partnerships with, and more so, and also, what are the currencies that are available when we work with Paymentology? If I decide to, okay, I'm going to use Paymentology for this process. We actually met at one of Paymentology's events here in Nairobi, and there was a lot of talk on the BIN sponsorship, which was a huge topic of discussion. So I'm curious to know the process that it takes to have that virtual card on my app, and two, the currencies that are available, and 3, BIN sponsorships.
Okay, thanks. So that's assuming you want to work with Paymentology. What will it take for you to issue cards in the market?
Yes,
right?
exactly.
So again, let me try and paint a picture of how the issuing space looks like. Who are the partners and what's required at what stage? Now, number one, each and every country has their own laws. As I said, that then license the central bank, and the central bank license banks.
Yes.
The way the issuing space works is that there are partners that have to be present for you to be able to issue a card. So I'll just run through them quickly. One is a scheme. A scheme is a network. We know the schemes that are present in the Africa region. We have Visa and MasterCard. Now, we as Paymentology, we work with both. We are partners with both Visa and MasterCard.
Okay.
That's number one. Number two, for each and every jurisdiction, there is a bank. And this particular bank is licensed by the central bank. That's number one. And it's regulated by the central bank. And then number two, this bank is licensed by the scheme to issue cards. So the way banks get licensed, and maybe if I divert a bit, the way banks get licensed is, one, a bank can be a principal member of a scheme, either Visa or MasterCard, or an associate member of a scheme. Now, this particular license, it is exactly what enables them to be able to issue cards on that scheme's network. Now, so you need to get a BIN sponsor, because the banks are the ones who are enabled to sponsor you to get a BIN.
Card.
And a BIN is a bank identification number. That's why it has to be a bank, because it belongs to a bank. So you get a BIN sponsor, and then the third player is now the processor. Now, the processor here is the third-party processor, is Paymentology. So what we do as Paymentology, and let me just also mention the fourth player, which is now the program manager, which is now the fintech that wants to issue the cards. So what we do as Paymentology is that we bridge the gap between the fintech and the scheme by providing APIs.
Yeah.
So these particular APIs are what the fintech calls for them to be able to issue the cards. We have already done the work. We have already integrated onto the schemes on the clearing side. So we are able to process the transactions, and we are able to generate primary account numbers, which are essentially card numbers. And then you issue cards based on this. So when you get a BIN from the bank, when the bank, actually it's like walking. So the bank will walk to Visa, get a BIN, and come and tell you as, let's say, Honeycoin, this is your BIN. This particular dedicated BIN is yours. Now, when you get that BIN, a processor is attached, is assigned to the BIN. So the BIN has been assigned a processor, say Paymentology, hopefully. It's Paymentology, right? So Paymentology then does the heavy lifting, which is converting these numbers into a card, which is now what we do through our implementation programs. So we do have different teams that handle different stages of the project. As I said, I'm in charge of getting you, solutioning with you, coming up with this card program, looking at the use cases, and looking at the impact, trying to help you come up with a model for you to be able to be successful in the market. Then we hand you over to the implementation. They get that being live, and then we work with you. And in this journey, we have signed strategic partnerships with both Visa and MasterCard. So the scheme is also part of that journey. So we work with you not only as a processor, but as a partner. So I think I've answered your question. Probably even gone overboard.
No, you've answered it very accurately, because I'm sure there are people who are wondering, okay, how does this actually work?
Yeah.
And I'm happy you gave that context. I think the last thing that I had was the issue of currencies. So is
Yes.
it just a card that holds only one currency, or is it multi-currency? Is it USD? What's the currency options?
All right. And that's a very good question, because I know we do have issues with our local currencies trading against the dollar. And most of the people are always asking, if I'm paying someone and my card is the bin, that particular bin is Kenya shillings, how then do you convert? So that question, I will answer it in two fronts. Number one, the way we enable fintechs to issue cards, there are different types of cards. So there is a companion card, debit card, as you guys, as it's known in the market. There's a prepaid card, and then there's a credit card. And then there are Sharia compliant cards. Those are for specific markets. Now, if you look, Sharia compliant credit cards, it has to be credit card, right? If you look at a card, if you have your card right now, if you look at a card, I remember I was told a card is a promise to pay. It's not really a payment, it's a promise to pay. And that's why banks get settled at midnight. And then the merchants get settled afterwards if you pay using your card, because it's just a promise. I just have to confirm that, well, you're promising, do you even have the money? So where is the money? The money sits in either a bank account or a wallet, right? So when it comes to currencies, the question goes back to where the money sits. As a provider, let's say as a bank, you have a wallet, which is essentially the bank account. How many currencies do you have? On that, how many currencies are you able to support? We can provide a card, and on this particular card, can go and check on different wallets. We have done a project in Somalia right now, actually in Djibouti, in Somalia, with a bank that's going to issue prepaid card, multi-currency prepaid card, that even has Kenya shillings in it. So you can load the wallet, the money will reflect on the card, but when the transaction is done, there's a primary currency that is normally set for the bin. If it is a USD, it is USD. If it is Kenya shillings, it's Kenya shillings. But the flexibility in terms of authorization of transactions can be done depending on the wallet supported currencies, right? So if you have Kenya shillings, it will authorize based on the balance on Kenya shillings. If the transaction is in USD, there's exchange that is done here, and the rates are normally controlled by the schemes, by the way, and you can have a markup. So if it's the scheme gives you this rate, you can add a 3% markup, 4%, 5% markup, and that's revenue for you. So that when I want to pay in USD, I'll pay in Kenya shillings an equivalent plus your markup. See, so we do not control the currencies. We process and we enable. When it comes to currencies, the owner of the wallet.
It depends on the owner of the wallet and the bin sponsor.
That's why we are able to scale across the whole of Africa.
Okay. Wow. I think that has been a very wholesome episode. I think I'm just going to ask you one question and then ask the final questions that I ask all my guests at the end of every episode. But just to summarize this conversation, looking ahead, what would you say excites you about the emerging trends and, just financial inclusion across not only Africa, but primarily Africa and across the globe? What are you looking forward to?
Well, one thing that I'm looking forward to is probably to be achieved within my lifetime is we looking back probably in the next 10 or 5 years and saying that when it comes to financial inclusion, whether it's enablement, whether it's the driver's access awareness and suitability. We have done a tremendous job, and the generations that are coming are not finding it hard as the people before us did. And they can pay and get paid anywhere, anytime. That's one thing that I'm looking forward to. And if I narrow it down towards to card payments specifically, and to probably give you an overview of what I expect in the next few years, is that because even telcos are now issuing cards, and if you look at the use cases and the case studies that have been done for these particular telcos, they have solved problems. And now we are moving to the next level where it is going to become, in fact, let me paraphrase that. It is going to be in someone's disadvantage if they don't have a virtual card, or they are not able to access digital money or virtual money, because the world is moving at a very high speed towards digitization of all services across the platform, whether it's government services or whether it's financial services.
I actually saw, as in last week, but one, Mauritius now started issuing your IDs virtually on their government scheme. So I thought that was an interesting fact.
So, and again, the other thing that's coming up is central bank digital currencies. And if you look at it strategically, even Ethiopia, which is one of the markets that had been closed for a very long time, now they even have a capital markets authority, I think. They recently, as recent as 2 days, 3 days ago, the Ethiopian Central Bank made a proclamation opening up Ethiopian banks to to foreign investment.
Wow.
And they have also made a proclamation that I think alludes to having a central bank digital currency.
Wow.
Rwanda has already done that. South Africa has done that. Nigeria has done that. Kenya has done that, because we have a central bank digital currency policy, which I don't know if it's already published or if it's in the public, but probably you have to check that out.
Yeah, we'll do a bit of research and let you guys know.
Yeah. So the trend here is we are moving digital.
Digital.
And do you know who is driving that?
Gen Z.
No, actually, it's well, Gen Z. Well, Gen Z because of adoption. I mean, I don't want. I'll give you your flowers, right?
Sorry.
But what's actually driving that is because you can't leave your house without your phone. If you leave your house without your phone, it's
Your
like
day
you've
is
left
ruined.
your whole world behind.
Your whole world behind.
Somebody asked me a very simple question. You've left your house. You're driving. You're on the road. You're on the highway. You realize that, one, you've left your phone at home. And two, you've left your wallet. Which one is going to make you go back?
Your phone.
Your phone.
My phone.
Yeah.
Because I can access my wallet on my phone.
Exactly.
Yeah.
Because you can access your bank account on your
phone.
You have your ID, probably a picture of your ID on your phone.
Yeah.
Every single thing is moved to your phone.
There.
So that's the trend. And now from a paymentologist perspective, as the world moves digital, we are also at the forefront of enabling more and more and more fintechs, more and more banks, more and more neobanks to be able to issue cards, digital cards, so that when you don't leave your phone at home, not only do you have all the essential contact information that you need, all the essential access to whether it's your email and all that, but your phone also turns to be your payment instrument. And we're doing that through solutions such as tokenization, which is tap to pay. And that's one thing that I think in the next few years, even here in Kenya,
because people Apple Pay,
Exactly.
it's just tap to pay. I think we're gonna get there. I think there've been solutions for tap and pay, but adaptation has not been as high. But I think you're 100% right. The world is moving very digital. I mean, we had a situation here in Kenya, with the whole mandamano that's been going on. I'm not touching too much on that, but all is to say that the solutions that are being built, they are literally what's this? There's this platform that a lot of techies use, social media platform. I don't know if it's, what is it? Discord. There are Discord groups of people in tech just trying to see, okay, how can we code something to figure out? Someone literally a day after the finance bill, ChatGPT was already created to ask any questions that you would like about it. So especially here in Nairobi, no, in Kenya in general, I think there's an openness when it comes to payment and making them digital because of how we've been conditioned with paying through M-Pesa. I think also just working within the fintech space myself, you can already see that the boom for fintechs is not for nothing. There's a problem and a solution that is trying to be provided every single day. And I think with the right access, as we mentioned, with the right rates, costs rather, and with the right level of awareness as you're listening to this podcast, then I think we have a really good future when it comes to providing payment solutions. And thank you for your team and nyinyi watu wazee kidogo for the foundation you have really set for us, because really and truly, even just from this podcast episode, we can see that you set yourself up to try and find out the problems and provide solutions so that you can ultimately make an impact. And I can tell you that so far, I can see the impact that you have been making, and kudos to you and the Paymentology team.
Thank you.
Yeah, so I want to ask you 3 final questions, not for this interview, but questions that I ask all my guests at the end of every episode.
The fact that they are all now looking at me. Okay, what are the questions? I wasn't prepped.
I know they are lots because it's about to end. So
for the listeners, I wasn't prepped, but I'll try my best.
Don't worry. They're very simple ones. I'm sure you'll get it. It's just 2. So first question I have for you is, what's one word to describe the journey to get to where you are today, and why?
One word to describe the journey to where I've gotten to and why?
Yeah.
Do they have one word for that? I think it's been fulfilling. For me, it's been fulfilling. I think that's one word I would use to describe it. And the reason why it's been fulfilling is because in 2019, there is a business that a friend of mine had in down here in Kahawa, not Kahawa, Gido 45. No, 45 is the other side, 44, Kahawa West. Yeah. And this guy used to sell trousers, right? I still buy trousers from him till date. While I was a DPO, we enabled this guy to be able to receive card payments. And right now, I think he has around 4 stores. And that was the first store he had. And I think when Alex told me, his name is Alex, that it opened up opportunities for him. I was always skeptical because I told him how many people come here and pay using card. But he told me that the fact that I have it means that once I understand how it works, I can be able to get more and more payment modes. And I can get more and more people to pay using the payment mode of their liking. And when that happened, I got so many customers, and I decided to get more stores.
Yeah.
Literally. So it's been fulfilling because at least I have a reference point.
Yeah, and you know the solutions that you provide, or what Paymentology is doing, or what you're doing. It's almost like the effect, the cause and the effect is that people have more opportunities for access to finances, which some would argue is like the biggest challenge that people need is money. And so being able to provide other opportunities for them to access money is something to definitely be acknowledged. So yeah, fulfilling. Okay. Second question I have for you is, do you have any regrets or things that you wish you did differently throughout your journey?
Okay, regrets. So yeah, I think now in what sense? Because regrets I think there are so many things I wish I'd done differently throughout my journey getting to payments. One of the things that I should have done, actually, is as much as we are talking about financial inclusion, all these modes and all these payment solutions that fintechs are coming up with every single day, when I was getting into this particular space, one of the things that I should have probably done when I was starting was preempting what the future would look like. And I think at one point I was doing it because I was pretty much trying to get everybody else sorted out to a point where I think I was not paying attention to myself. And it took me one particular incident, and that's when I started to pay attention to myself. And it kind of helped me in a way to set the bar higher for myself, because when you do something for so long, you realize that you become too good at it, that you become lazy. If you've read the Atomic Habits, it's actually one of the things that is James Clear tries to say that when you want to create a habit of when you want to excel in something, make sure that you do something challenging every single time. If I had done things that were challenging at certain points in my life, my life could have taken a different direction. Yeah, I don't want to go into details because that
we have seen you dancing around the details.
The official answer. That's the official answer.
The official answer. But I mean, my third question, I think you maybe have already answered. In case you want to add to it, is what advice would you give to someone who's looking to kind of get to where you are?
Get to where I am.
Or do something in payments.
Chase problems. Look for problems. I think my advice to every single founder that I talk to, every single CEO, every single CTO, they're always looking for solutions. But the answer is not in the solution. The answer is in the problem. Because for you to have an answer, you must have a question. And the question is a problem statement, right? So look for problems. Young innovators out there, everybody who is trying to get products in the market. A story was once told to me of guys who spent quite a lot of money building a solution, only to take it to farmers and realize that these farmers don't really care about what you're telling them because the solution was not built for them. But then we asked these guys, the whole time you're building a solution, you couldn't ask what the problem is, because from a problem you build something, right? Yeah. So what I'm trying to say is, you see that silence that comes after a loud bang, that is the solution. The loud bang is the problem. Now find out why there's the loud bang. Bring that forward, get the solution.
I love that. That is an amazing way for us to close off this episode.
Thanks,
Julius, for joining us. This has been so lovely. And we'll make sure, if in case you want to get in touch with Paymentology, you could find Julius on LinkedIn, or in case he leaves us any contact information. And yes, and if you're tuning in and if you've reached this far, please make sure that you subscribe from wherever you're listening from. It's actually a matter of offense if you are this far into the video and you've not yet subscribed, whether that's on YouTube, Spotify, Apple Podcasts, or any of the major listening platforms. Remember that we're rolling out our newsletters very regularly. And so for you to subscribe to our newsletter, head over to mtsafrica.close/join. We are also modifying our website and it's going to look absolutely fantastic. But for now, you can check mtsafrica.co/join. And we have some good stuff coming your way soon. And yeah, that being said, thank you, Julius, and we shall see you in the next one. My name is Alice Kanjejo, your lovely host, and yeah, cheers.